What are estate taxes? Well, to begin with, let's define what is an estate. Well, when an individual passes away and they have net assets, meaning assets above debts that they owe. So if an individual has assets that are not owed to others, then those assets at the time of death might be subject to taxation. It's in a way a form of property tax. That is, the tax is assessed on the value of the property possessed by an individual above their debts at the time of their passing. With that being said, it is important to remember that the tax is assessed against the estate. So, if an individual has property, that's any form of property, personal property or real property, meaning real estate, land, that type of thing. If they have assets at the time of their passing and they're going to pass those assets to their loved ones via a will or last will and testament, for example, then it is the estate itself, before those assets are transferred away to the heirs that are designated in that testamentary document. The taxes are assessed against the estate prior to that happening. With that being said, if there is insufficient cash or liquid assets on hand to pay those taxes on the assets being distributed, it may be necessary that whoever is administering the estate would sell some of that property just to pay those taxes before it's distributed. A pejorative term that you'll hear for estate taxes is the death tax, because it only arises on the value of an individual's property after they have died or passed away. Now next, what is taxed? Well, first we look at what is part of the estate or the gross estate. That is the value of assets in the estate or owned by the individuals at the time of their passing. So you would subtract away any of the debts owed against those assets to get to the value of those assets to the individual at the time of passing. So in a way, even though it's the gross estate, all the assets held, it's net of the debts owed that could be collected against those assets. Okay, now also because it is taxed against the total value of the estate, an individual can make gifts throughout their life of assets to others. And there are certain deductions or exemptions available every year. Currently, you can make $14,000 per individual of gifts to that individual per year without it affecting or any amount above that $14,000 being included again in the gross estate of the individual. So say I have $1 million worth of assets at the time of my death, and during 1 year I pass to an individual $15,000 as a gift. Well, $1,000, $1,000 above that $14,000 would be included back in my estate for tax purposes, but that $14,000 would be deducted from the amount of the gross estate that would be subject to taxation. So generally that's how that works. It keeps people from simply giving away all of their assets prior to their passing. Also, any assets that are delivered to a trust, for example, or used to purchase an insurance policy that has another party as a beneficiary, those are again deducted from the gross estate, the value of those, because once again they are an asset purchased, but they are not subject to probate, and once again can be used to avoid taxation as part of the individual's estate. But again, that is the subject of estate planning. The purpose of most estate planning is to make certain that assets pass according to the decedent's wishes, but also to avoid taxation on those assets. Now, what is taxed? Generally, there is a threshold amount that an estate must be worth, or the value of the assets in the estate, before it is taxed. And currently in 2023, the value of the estate can be up to almost $13 million, $12,920,000, or to $20,000 per person, is exempt from taxation. If an individual has more assets than that, then the additional assets will be subject to taxation, and the flat rate of taxation for every dollar above that exemption amount changes any given year, but generally it floats around 20%, somewhere between 15 and 25%. Historically, it has gotten as high as 60% above the exemption amount. So with that being said, the exemption amounts also change regularly. In recent years, it has been as low as $2 million, and then currently as high as almost $13 million. But another important thing to remember is that if an individual passes and they don't use any portion of their exemption, then the remainder of their exemption can pass to their spouse. Another important exemption there is that an individual can generally pass all of their assets to their legal spouse without being subject to taxation. That is, that the entire amount passes once again free and clear of any taxes, and then the taxes will only be paid once that individual who received those assets passes away. So there's an unlimited spousal exemption there, but once again, there is a fixed threshold exemption for anyone who is not the spouse, who again is inheriting under the will or last testament.